Hi everybody, this is Osprey from mychartcoach.com, and in this video we're going to take a look at more of the stocks in the cannabis sector. So first up is ticker symbol IGC. Yeah, so this one retraced. It was down 36% on Friday. So yeah, it had a big pullback last week. It was down 3 days in a row. You can see here RSI has dropped back down to 50. The last time it had a pullback from 90 down to 50, that's where it bounced. You can see here it was up above the upper Bollinger Band, and it was at 90 on RSI, and then it pulled back down to 50 on RSI and hit that middle Bollinger Band, and it bounced off that level. That's the same setup that's going on right now. Above 90, back down to 50 on RSI, and it was up here above the upper Bollinger Band, and now it's retraced back to that middle Bollinger Band at 377. So the middle Bollinger Band is the reload level if support holds. If it fails to hold and it closes below and turns into resistance, that's going to signal downside risk. It could signal the start of a new downtrend. If that level holds, that's a great level for a technical bounce. As you can see back here, if you loaded off this middle Bollinger Band, that was a great re-entry level for the next ride higher. You can see the break above EMA4 signal to enter, and then the close here above the EMA4 on the third signal to exit. You can see it drop down. Same thing over here. You exit below EMA4, and then you were able to retrace on the break back above. But yeah, the big thing here on this chart are the gaps. Okay, so it did fill this gap here. This gap is filled between these two candles. Now we have an unfilled gap between Thursday and Friday, and an unfilled gap between Wednesday and Thursday. So going forward on Monday, the big level to break is going to be the bottom of this gap between Thursday and Friday. The bottom of a gap is always a tough resistance level to break. If it breaks above, then look for a potential gap fill and a run back up to EMA 4 and 8. You notice how they're lined up right there with the top of the gap level. So it's going to have to fill these gaps in order to head higher. So now, it's going to be all about holding that middle Bollinger Band and turning that level into support. You notice that there were 3 gaps downs, 1, 2, 3 gaps in a row, and so the 3 gap downs created a bullish 3 gap downs reversal pattern, and so this was a strong reversal pattern. We will be looking for bullish reversal confirmation next week. If you look here in our chat, this is the marijuana sector chat. You can type in the ticker symbol up here, IGC, and it'll give you the latest information. And you can see here last Friday at about 12:30, I posted information in the chat about the bullish 3 gap downs reversal pattern forming, and information about the middle Bollinger Band. It's going to make a good technical trade next week for a bounce. If you go back a little bit earlier in the day, you could see here at what was it, 8 o'clock here, 8 a.m. on Friday. I was getting everybody ready for a potential technical bounce off of the middle Bollinger Band at 379. So we had this as our target already. So if you'd like to learn more about technical analysis and trading marijuana stocks, please come check out our premium chat. Okay, if you look here at the weekly chart, you can see here it did form a bearish reversal pattern last week. Look at the big red candle. This formed a bearish dark cloud cover. So this is a strong reversal pattern. We'll be on the lookout for a reversal confirmation next week. What needs to happen, it needs to hold the EMA4 at 381. That's the pink line. You could see right there. It's been holding that level on the cruise. As it's been pushing higher. The downside risk is if it drops below that 381 level and closes below for the week, it could come down to EMA8 at 283. Now the chart is still super strong. Even if it did pull back to EMA8, it would just signal better entry points lower. Notice the giant volume spike last week. That's always a red flag when the largest volume spike is on a down week. It signals major dilution. It ran up here, to this 14 level. It hit 1458 for the high of the week, and then you notice the long upper wick. There was lots of dilution going on, shares being sold, driving it down from 15 all the way down to $4. And so this is the bearish dark cloud cover reversal pattern, and so you have to keep an eye out next week for for confirmation. If you look on the monthly chart here, you can see the monthly chart. It did pull back. It's pulling back into the bands. This month's candle is still was floating above the upper Bollinger Band. You can see the upper Bollinger Band's at 401, and so the candles are working back into the bands. It's going to be all about holding EMA4 at 351. If that EMA4 level holds, it'll signal more upside potential. The downside risk is if it drops below 351, it could come down to this 100-month moving average down here at 186 and test support. That's the gold line there. If you look here on the 15-minute chart for IGC, you can see it's been in this downtrending channel candle the last couple days. Here's descending resistance, ascending support, or descending support. And so what happened was over here, it dropped below that middle Bollinger Band back here on the second, and that signaled the start of the new downtrend. It failed to get above the middle Bollinger Band here, and then it broke below the green line. That was the 50 simple moving average. Once the candles are below the middle Bollinger Band and the 50 simple moving average on the 15-minute chart, it's a clear signal the bears are in control. Once again, that theory is proven correct because a major downtrend has followed. It's dropped below the 100, 200, 300, and 400 simple moving averages, the gold, red, blue, and black lines. Now it needs to get above that black line. If it can get above that 447 level, get back above 450, then you could see a run back up here to that 50 simple moving average and 300 simple moving average in the 550 resistance zone. Right now it's at 420, and after hours trading, that puts it right at the middle Bollinger Band. It has to turn that middle Bollinger Band at 421 into support to get a new uptrend going. You can see they keep pulling it back to the middle Bollinger Band into the closes, but that level fails to hold the next day and it pulls back. And so we'll see if on Monday there'll be a bullish change in trend or if there'll be one more gap down open. Okay, now let's look at DTEA here. So this is the David's T, and you know, it was pretty flat on Friday. It's pulled back. It was down down 3 days in a row. You know, it's trying to hold 50, trying to hold 20. The big thing on this chart, it's all about the 50-day simple moving average at 287. That's the green line right here. If that level can hold next week, it can get a technical bounce going. The downside risk is if 287 and the 50-day simple moving average turn into resistance, it could come down here and test the double bottom level down here in the 225 zone. Okay, to the upside, if it can break above the middle Bollinger Band at 295, that's the dotted purple line, the 100-day simple moving average will be the next target at 323. Notice there's a descending resistance line here. There's descending resistance, and that's lined up around 335. So you have this 320 to 345 level where the 200-day simple moving average, the red line's at, you know, some big resistance up above. Once it gets above that 200-day simple moving average and turns that into support at 345, that would be a level it could start heading higher from. Okay, let's look at CVSI here. This is an over-the-counter stock. Keep an eye on this one. It closed up 25% on Friday. It made a bullish move. RSI is back above 50. Yeah, you can see Fasto here. RSI here, it looks like it's been in this really tight channel. And so, yeah, if it can break through this zone and get above these 60s here, that should be a signal that the bulls are taking over. It formed a symmetrical triangle pattern. It's formed, you know, you have descending resistance, and then you have ascending support, and it's at what we call a flex point. Next week, either descending resistance or ascending support should break. Trading above 5 next week should signal upside potential. You'd be looking for a break above the closing price on September 18th at 575 there. If it can break above 575, the 7s would be back on deck. That's the high close from back here on the 22nd. That's the ultimate key level to break. That's the upside potential if it can stay above 5. Downside risk is if it drops down below this 50-day simple moving average and below the ascending support line, the $4 level, it could come down here to the 100-day simple moving average at 319. So a drop below ascending support puts 319 on deck. A break above descending resistance puts $7 potentially on deck, at least the 575 high close level. Okay, let's look at MMNFF. This is MedMen Enterprise. Okay, so be sure to have the dispensary-related cannabis sector stocks on your radar for the next couple weeks. That's the big talk right now. With Canada legalizing marijuana, for the first time, you're going to be able to go to a store and buy marijuana. Right now, the medical marijuana is shipped in the mail. So you put in an order for marijuana, they ship it to you. Now that's going to change. You're going to be able to buy it over the counter. And so dispensary-related cannabis stocks are going to be in play, very similar to how we had the cannabis beverage makers were in play, and you had anybody's CBD water, all that. You're gonna, I think there could be a run with the dispensaries, so keep an eye on that part of the industry, and so that part of the sector, and so keep an eye on MedMen. They are the top United States dispensary owners. The chart is heating up. It was really interesting over the weekend. If you look at the stocks that had over $100 million in market cap, in the marijuana sector. Most of them were down. You had Aurora Cannabis up on their IPO news, they're uplisted in the New York Stock Exchange. You had Tilray up down here, which was nice to see. But the big surprise, the big one, was look at MedMen, up 9% on the week. This was bullish divergence. The others, you know, you had Scott's Miracle-Gro slightly up on the week, but look how most of them were down on the week. To be up 9%, that's bullish divergence. That's signaling more upside potential. And so if you look here at the chart, it's above 50 on RSI. It needs to stay above 50. That would be bullish. Back above 20 on Fasto. And so it came down here and bounced right off the 50-day simple moving average at 389. That was the reload zone. So congrats to everybody that caught the alert. You know, now you're in the driver's seat. It's back above EMAs 4, 8, and 13. That EMA 4, the pink line at 416, that's the stop loss level right now. That needs to hold. If there were a close below, keyword close, you notice it could trade below intraday, but it's all about the close. If it closed below, then it could come down and retest that 50-day simple moving average. That's the downside risk from this level. Now it needs to hold the EMA 13 at 421. If it could stay above that 420 level, then that middle Bollinger Band there at 437 is the big level to break. That's the dotted purple line. Check it out back here. The last time that it broke above the middle Bollinger Band on the 15th of August after trading below for an extended period of time. Notice how an uptrend started. And so that's what you're looking for here. A close above to signal the possible start of a new uptrend, and then we're looking for a run back up here to a 511, which was the closing price on the 20th, and then a close above that 510 resistance zone should be the signal that it wants to break out higher. If you look here, this is an interesting, MedMen just started trading back in May. It has what we call a megaphone pattern. Now notice the ascending support, or ascending resistance and ascending support, and how they're getting wider, how it's getting wider and wider. And so, you know, the downside risk here is if EMA 13 at 395 support broke and it turned into resistance, it could come down here and test the 320 level. That's the ascending support line. Now to the upside, if it were to break above the all-time high close, which is right below 480 here on the what was that, this third week of September, then it could run up to the top of the channel, the current megaphone pattern, which is up here around 520. That would be the upside potential, okay, on this chart. Okay, if you look at MMNFF on the 15-minute chart, this will be the last chart in this video. You can see here it has a nice uptrending channel. It's trading above all the moving averages except for the black line, which is the 400 simple moving average at 433. It closed above this blue line, the blue line here on Friday. That's the 300 simple moving average currently at 420. It needs to stay above 420. If it dropped below 420, it could consolidate, you know, and it would signal it's not ready to go. That's just the key level. It really needs to hold that level now that it's above. We use that as our stop loss level, you know, once the share price is above. And then it needs to break above the high close here on the 4th. Right around this 430 level, you know, it says 427 here, and then it's going to be all about this 427 level, and it's going to be all about getting to this 433, 435 level. If it gets above those levels, it should be able to run up to this 450 zone, possibly back up to that 470, 480 level, maybe even up to the 5s. It has a nice little bounce going right now. It just needs to break through resistance. All right, thanks a lot for viewing this video. If you'd like to learn more about charts and technical analysis, please come check out the chat. All right, thank you. Yeah, you got to check out the premium chat. The marijuana sector chat is a premium service, and I can give you a free trial. So just come in to welcome and say hi, and I'll get you in there. All right, thank you so much.